right, so to talk about liquidity graph, I think this will be the best place for me to use and explain what liquidity graph actually is and what is not, so that it can actually help you to have a better understanding. So take a closer look at this. You are going to see something. Now, when we talk about liquidity is how easy an asset is able to be purchased, either sold or buy, without affecting the price of the market. How a large volume of assets could be purchased without affecting the price of the market. Don't follow that explanation, but that's the actual explanation for liquidity. But that particular explanation will confuse you. Take my own explanation. The first one I said is true, but take the one I'm going to tell you now so that you understand. Now, liquidity are always found at where structures end. Can you see all this place? All those places you're seeing are liquidities. Liquidity are found are on top and below this structure. So the moment price break here, the price will clear liquidity. So when we are talking about liquidity, what we are actually referring to is that people who buy at this point and sell and buy upward, they have put their stop loss here. So if price should come down, price is going to come and clear that their liquidity. Do you understand now? If price should happen to come down, let me change this color so that I can say, let's assume that price come down like this. You will now kick this person that was putting stop loss on this red. You will now kick the person out. So that is liquidity. That's not just the main point I'm concentrating on. So I'm concentrating on liquidity graph. Now, liquidity graph is when price has been consolidated. Like this is on a real time. This is today. Good. Now price was actually upward up here, but the the non-farm payrolls pulled down price, and price came low to sweep liquidity up to this level. What is the liquidity grab that it grabbed? All the people that put their stop loss within this area. All the people that put their stop loss within this area, for the fact that price swing down to this extent, price have been able to wipe them out of the market. Have hit their stop loss. All the stop loss that was in this axis have been kicked out of the market. So whenever we talk about liquidity grab, we are talking about the ability for market that wants to go up, just like this particular one that you're seeing here, that this market wants to go up, but because there are a lot of stop loss that are hit here, that are piled up here, the price will just push down energy and reverse. So once it does that, it's going to grab liquidity. Now what they simply does is that they're able to force down the market, and the market price will fall, and they buy it at a cheaper rate and go up. That's how they want us to understand, so that they can keep confusing and eating our money. Me, I'm now trying to explain to you so they can also understand their sense. Their sense is that by the time they see that we have put our stop loss here, they see that we have put our stop loss in these places. You know, our stop loss is going like this now, straight. That's how our stop loss are. By the time they see we have packed our stop loss in these places, the next thing is that let's assume our stop loss are in this area. The next is for them to force down the price of the market. The price of the market will just go boom like this. Once the price come here, it will kick us out of the market, and we'll lose money. Now, it's not as if this market want to go down. No. The market just falls down like what happened today. It just falls down the price so that they can grab liquidity, and after grabbing liquidity, the market reverse, just like what you're seeing now. So that is when we talk about liquidity grab, the ability for the market to push down and grab sales up or down and submit. So what do we do in situations like this? Can we maneuver this thing? Can we escape it? Yes, but not 100%. I said again, yes, but not 100%. For example, there are kinds of trade we should look for. For example, when you see this thing piling like this, you should know that whether you like it or you don't like it, this price will sweep liquidity. So all the stop loss that are here, you shouldn't take risk that is too high. That's the point. Let's assume you are risking half of your account, 10% of your account. No, because you cannot control this thing 100%. Price will sweep low and take profit and go away. Price will definitely do that. So since price has abilities to sweep low and take profit and go away, we should be very careful on what we are doing. What should we do from our own end in order for us to help ourselves? Is very simple. Your stop loss should be a little bit tight, where the market, where what you're risking is not too much and your volume shouldn't be too much, because that place is not safe. Now the kind of stop loss or liquidity that is a little bit safe is this one. Take a closer look at this. Let me zoom this so that you see. Now look at this place at this point as it is now. Price have already swept liquidity at this point. So if you're buying at this point and you put your stop loss at this particular point and put your take profit here, so that is approximately 1:4. So as the price goes to this point, you would have taken your profit before it to come back. So the price have actually swept this liquidity. You see, if you notice that what is here is a little bit high, lower than what is here. Let me clear this off. Look at the difference. If you can see the difference, let me keep a horizontal line so you see. Look at where this price, the liquidity here stop, and look at where this other one stops. So in this situation, if you enter the trade at this point and move on, you would have take profit before it will come back and sweep. So you need, anytime you're actually trading this part, always have in mind that price will come back. Price has the ability to come back. You cannot stop price from coming back to clear this liquidity, and that's what we know as liquidity grab. I hope you understand when we talk about liquidity grab, the ability that price will sweep in and keep people take stop loss and reverse. So price have come and saying is weak in, candle set a candle set just set up and saying is weak in, and keep people stop loss and remove them from the market and continue in this direction. That is what we call liquidity grab. Tomorrow I'll talk about liquidity void. So that is it. So what we need to do is always stay vigilant and control our losses. Let our risks be smaller so that we will not lose too much. That's the only thing we can do. And this thing happened both in the upside and in the downside. The liquidity up, the liquidity down. Okay, the liquidity up, the liquidity down. So as a smart trader, you're expected to be able to see this, and one way you can handle this is being able to understand demand and supply zone. Demand and supply zone. Once you're able to identify demand and supply zone, you'll be able to escape this. Let me show you something, which is what I actually talked about yesterday. Okay, let me show you something. Now notice this. Notice this. There's a fair value gap in this particular point. I talked about fair value gap yesterday. So if you can understand demand and supply zone, this will actually save you a whole lot. Sorry, my neighbor was starting generator. Now, did you notice that when the price came down, it stops at this particular zone, which happened to be a fair value gap of this very candle? Did you notice that? That's a fair value gap at that point. So this was the order block. Did you see the order block there? That was the order block. So if you were able to spotlight this order block, you trade only on the demand zone. So you will not have been able to jump and enter and put your stop loss here. As the price pull down here and reverse, it wouldn't have kicked you out. You understand? Or if you're able to set your entry point and keep at this particular point, when price come in here, you would have just trigger your buy stop, your buy limit, and put you back in the market. You would have been in profit. That's if you understand demand and supply zone. I hope you've learned something. I hope it's clear. If so, stay tuned. Tomorrow we're going to talk about liquidity void. Good night for now.